All right, ladies and gentlemen, in this panel, we will explore strategies for effectively managing risk and seizing opportunities in the ever-evolving digital asset space. And our panelists for these sessions, there are 5 speakers that are going to be talking and discussing about this panel. Dan, untuk memoderatori sesi ini, this panel will be moderated by Mr. Chen, partner at Saison Capital. Mr. Chen is a partner at Saison Capital, specializing in pre-seed and seed investment in fintech, B2B commerce, and Web3. Without further ado, please welcome Mr. Chen to come up to the stage.
Good afternoon, everyone. I'm excited to moderate this session, and I'm standing between you and lunch. So I promise that this will be an action-packed one that will nourish you guys with really a very strong lineup of speakers before we take our lunch break. My name is Chen, and I'm really excited to be moderating this panel on navigating the wild west of digital assets. Most of you who own crypto assets might have already experienced decentralized finance through interacting with some of these protocols. But the thing is, there have been many challenges, from things like Terra Luna to the many hacks that we have seen. It has developed not such a good name for itself. So the question is, where do we go from here? And what does the future hold? For this panel, I'm really excited to have a very strong lineup of speakers, which I'll now introduce. So starting with Marcus. Marcus is Head of Digital Assets at Symphony Digital Assets. He specializes in tokenizing RWAs and pioneered and hosts a Web3 talk with Pitch Media. Formerly a product manager with Phillip Capital, he now serves as Head of Digital Asset at Symphony Digital Assets. Marcus, please join us on stage. All right, next up we have Daiki Ishikawa, founder of Toki. Daiki previously served as an executive officer and head of biz dev at DataChain, where he led multiple projects related to blockchain interoperability in both Web3 and enterprise. So, thank you, Daiki. Okay, the next one is a familiar name to all of us. The owner of the Lamborghini that you see outside, Victor G, co-founder of Manta Network, the largest modular layer 2 on Ethereum. Please come on stage. So he has contributed to the academic and professional blockchain community, including his role as a researcher at the Harvard Kennedy School and MIT's Blockchain Lab. Next up, CJ Fong, Head of Sales at GSR. Please welcome up on stage. CJ is the Managing Director and Head of APAC and EMEA Sales at GSR, a global digital assets market maker. So all of you who are launching your token soon, you know who to speak to later. His team handles market making, OTC, treasury management, and VC. My hands are very dry. All right, last but not least, Eowyn, the CEO of Trust Wallet. Please come on board. Eowyn previously was the former VP at Binance and led centralized marketing, scaling users to hundreds of millions. And previously, she supported global startups and began her career at Oliver Wyman. So excited to have an incredible lineup of speakers. Because time is limited, I'm going to jump straight into it. I've already done the introduction for you guys, right? So maybe let's talk about the high-level picture. DeFi was seen as the future of finance, and that's what led to DeFi Summer a couple of years ago. But of course, we have faced a lot of challenges. Some people say DeFi is dead. Kind of what's your view on the sector right now? Maybe in 1 minute, would love to start. Ladies first, and let's go down the line.
Yeah, so clearly, if anybody wants to interact with the blockchain, you need a wallet. And for us, any of the on-chain projects survive and the blockchain thrives is the foundation for us to thrive along with it too. For me to see DeFi, I continue to see that as a future because the problem statement of where the traditional centralized financial system failed, the user expectation remain the same. No matter that's because the trust issue or because of the efficiency or because of transparency. So I think the thesis stands the same. And if you're looking at the last rounds of market failure per your prompt, it's mostly the centralized entities that fell rather than the decentralized entities that fell. So my thesis remain the same. We can see more growth happening, and all the projects here are building all together. And as a wallet, we already onboard 150 million total downloads of the users to decentralized finance, and we can see that as probably 60–70% of what Binance's total user growth numbers will have. So we're very much optimistic about it. And I know that Indonesia is not a market that is very much with much adoption for DeFi. That's why we're here with all the speakers and try to bring more adoption and awareness to it.
Amazing. Yeah, CJ, tell us what you see because you have access to the data.
So DeFi is not dead, that's for sure. Dare I say it, when DeFi summer occurred, we got DeFi wrong. And I say this as a practitioner from the banking sector moving into this space. And I say this because when DeFi first came out, the thesis within the Web3 community was, in typical fashion, we are going to conquer the world. And then you take a step back and you realize the world doesn't really work like that. So what actually happens and what is DeFi? Well, DeFi is an access product. DeFi is about last mile banking, so to speak. It helps people who do not have access to traditional ways of doing it. It will never outright replace the traditional finance sector. And the reason why is, in traditional finance, we are more concerned about certain things, like KYC, AML, compliance, regulatory bodies. And I think that's an aspect of DeFi which we didn't get the first time right. And I agree with Eowyn, it's coming back. We are getting smarter about it. We are no longer saying that this protocol is going to replace a bank, which was what everyone was calling for last time. Rather, they're going to work in tandem, serving different sectors of the market.
Wonderful. Victor.
Hi, everyone. Manta actually, I think we are one of the earliest L2 really focus on DeFi at the beginning. I'm not sure anyone remember last year, we have this Panta yield, campaign called the New Paradigm. And a lot of Indonesian community really love it because, it doesn't only have one layer of yield coming from Manta airdrop. It also coming from eigenlayer airdrop, and also the protocol on Manta's airdrop, and also have the base yield coming from treasury bill or e-staking. So we know this DeFi game very well, and we provide all of this with a very secure way. We work with a BlockSec and make sure the sequencer level is safe. And we also, after launch, midnight, 3 months later, we work with Binance Safety on the custodian side for the institution player, make sure it's safe. So a lot of partners we work with, but we keep the network really safe. Nothing rock until now, and hopefully until future. And I think security is most important for us. And then we just figure out how to get more layer of incentive on top of DeFi. And everyone can join, not only big institution player, what GSR and other this professional player can get in. Anyone, if you have money, you can just deposit your digital assets, same as institution. That's why I think we give a fair opportunity, and then on top of that, we make sure there's more asset on top of Manta. One of the ecosystem project on Manta called KiloX is invested by Binance. They have really huge volume on Manta. And right now, the largest TVL project is basically have lots of meme coins recently able to trade on Manta. And because everyone knows we are the first and largest modular L2, so we have the cheapest gas fee. So basically, you use a 0.1 cent US dollar gas fee, and then you can trade whatever meme coin. So that's something we are keep looking for. We push the ecosystem projects, keep building great, launch new asset, great yield on top of it.
Daiki.
Selamat pagi semuanya. I'm Daiki from Toki. In my point of view, every single innovation has a pretty similar cycle, like Gartner's hype cycle. As you know, this expectation for the new innovation go down, up and down, and eventually go to the mass adoption. So the current situation or the challenging that we are facing is just on the path of that cycle. So eventually we're gonna get over this situation. And after the crash of the DeFi summer, of course, maybe many users have lost their funds, and maybe the price goes down. However, that's gonna just one moment, and we're gonna get over that situation. And we've been making a lot of progress in terms of tech stack, regulation, and applications. So this is a matter of the time, just like that. And we are the actual mass adoption, true mass adoption, is coming up from now on within a few years. And Toki is providing the cross-chain functionalities or cross-chain protocols for stablecoin platforms. So we are working closely with the Japanese financial, the mega banks, like MUFG or other stablecoin platforms, to provide them with our cross-chain functionalities so that user can purchase any real-world asset on specific blockchain with the stablecoin on different blockchain. So this is what we are doing right now, and I am pretty positive and optimistic for the growth of this the digital financial innovation.
I mean, as the youngest person in the panelists, the future of finance means different things for different age groups. And for much of a time in CT, crypto Twitter, for the young people, the future of finance means actually becoming like a fin bro and actually making it big. But in terms of whether future of finance, DeFi is still the future of finance, I think it is, in terms of adoption. And at the end of the day, many global players, big asset managers, and also your government regulatory bodies are, in the end, still going to use Ethereum, right, as your decentralized protocol, decentralized blockchain for your network and infrastructure layer. Yeah.
Very cool. Very interesting perspectives. I'm going to throw out a hot question to all, and I just want a simple yes or no answer, and then I'll pick on a few to sort of elaborate. Do you think DeFi needs more regulation? Just a simple yes or no answer, and then I'll call on to elaborate more. Want to go first?
Let's change the sequence a little bit.
Okay, sure. Go
Sure.
for it first.
Yeah. Yes.
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 It's okay to say no. I think they will still let you out of here.
I'm actually going to say no.
Okay, cool.
I'll go with a no to make the conversation more
Oh,
interesting.
very interesting. Okay, so we have a split panel over here. Super interesting. So for the yes house, any of you want to take the lead for why do you say yes? Why does DeFi need more regulation? Any of you three?
I mean, I can start. Like, basically, we actually working as a decentralized platform. Like, even ourselves, we cannot change the, anything on the Manta's blockchain. Everything, if we did, it cannot be verified on Ethereum. So it's clearly like something get trouble. Everyone can see that. So we cannot stop everything, but basically we can work with partners to at least check is there something right or wrong. And that's the reason we work with a BlockSec. And if something is truly wrong, and there as a partner can actually stop the transaction and make the hacker or something get out. We are in, because it's a really decentralized world and assets safe in blockchain. And if there's some big hacking issue, everyone will lose their digital asset. So we have to make sure if we find the bad guys, the regulator can come and take them to jail. That is something I think really needed in the space. And but otherwise, if they're fine, it's become like it's become California in States, you know, like they can easily go to a store and then take whatever they want. And that's not a good place to live, right?
Okay, Marcus, Daiki, either one of you? No, either one of you, yeah.
Okay, yeah. So yes, we need more clear regulations to grow this entire market. So in order to onboard the institutions or institutions' money, we need more regulations. However, the regulation is for the three aspects, basically, in my opinion. The first one is economic growth, and the second one is user protection, and the third one is misuse mitigation. So regulation have to make a balance among those aspects. However, in order to make that balance or make better balance to accelerate this DeFi innovation or blockchain innovation, I guess we need open sovereign IDs. So this is the missing piece. So without these sovereign IDs, it's going to be hard for regulators to set up the reasonable regulation. So we need more clear regulation, but in order to set up the reasonable regulation, we need IDs on blockchain. So this is my thought.
Cool.
I'm actually more interested to hear the reasons for the no. So
Yeah.
I'll pass and then.
Okay.
Yeah.
So I'm going to start it, and it's counterintuitive. GSR takes pride in being the only regulated market maker in the world right now. We're regulated by the EMEA.
Yeah, correct.
I signed the documents. I say no for two reasons. One, the spirit of DeFi. And two is expectations of DeFi. In the spirit of DeFi, DeFi is supposed to be a world, and I go to my earlier point, where it's to serve the underbanked. It's an access product. And if you think about every failing in DeFi so far, has not been a failing of DeFi. It has been a failing of human beings. It is humans who have actually rugged other humans. And I was around when Lehman guys walked out on Midtown with their boxers. I've been around when the PIGS crisis hit. I've been around when the Greek crisis. I mean, I've seen it all. And it's always humans doing it to each other. And regulation is not always the answer. It's more of an oversight concept. And I think the other part, and this is where I'm going to start diverging from the rest of my panelists here, where I don't think we should keep harping on having institutions entering DeFi. And the reason why is institutions have a very different set of considerations when we trade in DeFi. And I say this as an institution. My biggest consideration is not about the speed. It's not about lower transaction costs. It's not about transparency. It's about making sure I'm not trading with a terrorist. It's about making sure the tech stack, the compliance stack, there is that audit trail that I can use and go to a regulator with. So DeFi is supposed to run in parallel. It is for a part of the ecosystem, a part of the community that can't get ready access to a Bank Mandiri, to a HSBC, to a Lloyd's of London, for instance. And I think because of that, trying to figure out how we're going to, and to the point of a gentleman earlier on, where the banks are going to use Ethereum, I don't think they will. And the reason why is it's completely public, but they're banks. Data privacy is key in what they do. You're going to see hybrid models there. So I don't think we're at a stage where coming out right and saying, we're going to regulate DeFi is going to make it work. I think having an oversight framework, which I agree with Victor, where people who rug others, who are criminals, well, they're criminals. We don't need extra regulation. They just need to go to jail. And that's something that is in the same thing, right? Bernie Madoff, one of the first, right? And the biggest in recent cases. It is about humans. And I think because of that, I don't see that direction of regulation being the main driver.
Amazing. Please.
Yeah, I think I agree with him on a lot of the principles. I think when we're thinking about do we need regulations in DeFi, we need to think about what problems is it supposed to solve. I think Victor touched upon user protection. Yes, that's usually when good regulation come into be, you should protect the consumers. Another one is protect the fairness of the market, avoid insider manipulation or any kind of sort of market manipulation. So if the goals are like that, I think the next question is what is the right solution to solve the problem? So if we want to protect the users, if we wanted to build the trust, if we wanted to avoid manipulation, then the question is regulation the only way to achieve it? And my argument, by both very similar to DJ, is that I also previously work in New York on the Wall Street. Those are my clients. I see how New York, supposedly the most advanced financial institutions and the clear regulations guideline post Dodd-Frank 2008 bubble bursted, is that Regulation imposes a lot of the operational things to it, but it doesn't necessarily change the culture. How Wall Street operates remain the same after '08 financial crisis comparing with before. So then the question is, if you force behavior in operationally, it doesn't necessarily change the culture, change the heart, change the behavior, which is the human, then this is why we got into crypto, got into DeFi, because we do think that even though you don't change humanities fundamentally, you can have technology, have better solutions to bring transparency, to hold the trust, using the market mechanism to force that the good behaviors will be rewarded in the markets through competitions, and also bad behaviors will get chased out of the market. So using us as an example, wallet is an incredibly competitive space. It's more than 1,000 wallets out there. Every day there's a new wallet. Everyone wants to solve the UX problem to the industry. But the one that's long-lasting survival, MetaMask or us, since 2017, is because we know if we wanted to build a long-term project, there are certain kind of behavior we need to abide by. There are certain level of security standards we need to really think hard on in every level of the decision making, from my level, from the engineers, from the CS customer support, on how to avoid any of the vulnerabilities. Because we know that if we have any of the security hacks or any of the decision that we make wrong, or even if we have bugs, we didn't treat users rightly, we will get chased out of the market. We will no longer win in the longer term. It has to be the longer focus that because I want the business to win in the longer term, I will voluntarily choose to do the right thing is the right way to change the culture and the behavior. And because of DeFi brings all the transparency to the code, people can verify how we hold the users' keys. With the open source, we work with the white hat communities out there. All the engineers can submit bug reports to us. Those are the efficient market way to also hold accountability to project like us as well. So I'm using us as an example to show that because we care about the long term of the business success, we care about living up to our branding of being trust. That's why we will try to behave in the way, even without the regulations, to think in the best interest for the users, to want to grow the industry bigger, because that's how we survive. So that's my point of view, is that if we are thinking about the same problems to solve, which is the same go-to regulations, how can we do it better in our industry at the current moment, rather than having a less ideal, optimal solution being forced upon the industry that will actually kill all the user experiences, kill the projects, and the industry becomes smaller. So that's my argument for no regulations for now. Let the industry figure out a better solutions, use the market mechanism and transparency that we're supposed to be here to solve the problems for the same goal.
I love asking, give a round of applause to the panelists, right? I think incredible answers, and love these spicy questions and how the passionate responses I get. So in light of time, I'm going to throw one more. Once again, same plan. Victor, I'm going to start with you because I started with the ends. Simple answer, agree or disagree, and then explain, right? So here's the statement. The only reason why DeFi exists is for users to farm unsustainably high yields. Without the yields, we don't need DeFi. Agree or disagree? We'll start with Victor, we'll go down there, and we'll come back here.
Of course not.
I'm the same camp. I disagree.
Absolutely not.
Okay.
No.
Yeah, no.
Okay, so we got unanimous. All right, okay, that was a bit of a leading question, I know. But I would love to hear kind of each of your takes on this, right? Because so many people, honestly, myself included, like use DeFi primarily for a bunch of reasons, but what attracts me to get in there, what the first place was, well, wow, good use, right? A good way to farm. So love to hear your take on this. What other use cases you see? Yeah.
I'll kick it off. DeFi yield farming, when it first started, is fundamentally broken. And the reason why is it's like a house of cards. I think the question, and we should always look at it from another point of view, how are these yields being offered in the first place? Right? I'll give you an example, right? Let's talk, you brought the Lunar crash, actually. And we know a lot about it because we were exploring it at the same time, and we know a couple of other market makers who got completely destroyed by it as well. At the time, it was the stablecoin UST, which is technically a dollar equivalent, right? If a dollar equivalent stablecoin is paying a yield of 20% per annum, and 10-year US Treasuries are trading at 3.7 at the time. There's something wrong with the system, right? The money doesn't grow on trees. I know we wish it does. I know right now the meme coin frenzy is showing that trees can be planted every day. But fundamentally speaking, DeFi yield farming was always about allocation of capital. And the problem it created actually in crypto was it actually destroyed more projects than it did a continuation. Because what you ended up happening, and this was the funny part when I first looked at it, the first thing it reminded me of was a bunch of gypsies. Because literally you were going from protocol to protocol, farming as much as you can and moving as much. And Alameda was the biggest culprit in doing stuff like this back in the day, right? I think in a way we've changed from that. And now the way DeFi and yield is being looked at is almost from where can we create the yield from to be able to pass it through. And that's why we're going down, and I love what the panel was talking about before this, right? Tokenized securities, right? US Treasuries. It's a proper pass-through yield. Now, there is an element to say whether or not retail should have access to a tokenized treasury. That's a completely different argument. But at least the yield is being generated from somewhere. I think the biggest problem in crypto, and this is something we have to be very aware about, staking, while it sounds absolutely amazing, if we are not careful, just kicks the can down the road. Because literally what happens is almost like a bond, right? You invest your money, I pay you a coupon, you liquidate the coupon. Eventually that principle is going to come to pass. And when everybody liquidates together, it's like the building's on fire, one door, and everyone's running from the same door. So I think that's the issue of DeFi yield farming. But I think DeFi was meant more for that. And I've said it multiple times. DeFi is about last mile banking. It's last mile access. And I think that's what we're going to head towards.
Any of the panelists? Go for it, Victor.
Yeah, I mean, like, I think we started like a TVL game like last year, and we know the yield farming extremely well, trust me. And we do this referral system, new paradigm, renew paradigm, restaking paradigm, you know, a lot of like farming games. But eventually, you can see like in the past 6 months, the Manta's TVL is like very sustainable after all this paradigm game, because we launched the CD5 product and then we work with Binance. Right now, all of these LST stay on Manta. They can also even farm in other chains, but the TVL is really sustainable. And then actually Manta didn't provide, using Manta token, provide like this kind of yield. But the yield is generated from like a funding rate. So it's actually very organic. And the reason we do this, because I know like this kind of farming, like TVL game is not sustainable. You know, like in the early days, if you deposit like, you know, like let's say like 10K USD, you will get like 16K in 1 month. That's basically the first month of the Manta new paradigm, which is insane, 60%, not APY, just monthly yield. But I mean, a lot of people then come to like copy us, and then there's so many Bitcoin L2, like, and also Ethereum L2, Squirrel and ZK Sync, everyone try to play the TVL game and Linea, and all of them after every one player launch token, and then people complain about them, and then talk about Manta again, and then another player launch token, and then talk about Manta again, because all of this yield farming is the repeat game. It's not sustainable. People just dump the token. But what we try to do is, you know, we try to work with the institution. We keep the TVL sustainable with not a yield from this like native token, but coming from the like the highest yield from the market, what we can get. It's a fair market. If you have good partner, you can get good yield. And if you make the DeFi permissionless, everyone can participate it. That's kind of how we think.
I'm kind of with Victor and CJ on it in terms of like the whole sustainable use and knowing where the yield comes from. Because like the saying is always like, if you don't know where the yield comes from, then you are the one that's being farmed. And the whole thing about working with institutions is, I think one of the most sustainable ones are actually money markets. So it's like the typical lending and borrowing, and in institutions, B2B, you actually need a lot of that, right? For your margin, for your algo trading. And these are things which are actually sustainable. And it's no longer the case where protocols try to hide behind, I just show you the APR, not the APY. Because if you compound it, then it's like ridiculously like 10K% APY. And then it's like a hot potato, see who gets in and see who gets out faster, right? But in the sense where we're slowly going towards the case where sustainable use are being accepted and users are being more customized, where the difference between TradFi and DeFi, it's not that much different, right? Maybe yields are a little bit higher because the liquidity and the books are thinner, right? So like things like your ETHNA, your USDE, right? These are things which are sustainable because there's a basis for it where it's not your algo stable coins of just random printing money, but there's like actually a yield which you can track it, and it's all back to where, even though all the money is still in crypto, but there's actual people using the underlying and therefore gives the yield.
Yeah, pretty same. So APY or yield is not coming from DeFi. DeFi itself is just, in my point of view, a tech to streamline the finance systems or finance flow. And the token, the root value of the token is coming from, or it's supposed to be, comes from the root of those assets, which are cash flow or utility or expectation. So those are the root of the value, not the DeFi. So that's why what we have to do is just simply focusing on those aspects. So which is pretty same as the traditional finance or other products. So each single product have to focus on that aspect to make the DeFi as an ecosystem sustainable. This is my simple thought on it.
I'll add one simple thing, which has to what CJ was talking about, bank the unbanks. That's what we're trying to do. So besides the yield, I think one of the fundamental values for putting your assets on chain is you can have better transparency of holding your assets, which we call it self-custody. Like no one can take your money away from you as long as you have your key. And one thing that we're working with just recently is that we work with Binance P2P to allow users to be able to actually onboard their cash into the crypto format and holding in a better way than traditional cash format. And thinking about who this will serve. This will actually serve the users, and I think the potential users that could not be served by the banking systems. You cannot pay those $100 worth of the account operational fee, and you cannot get the customer support, you cannot hold a certain level of the balances. And that's what we as a wallet can do using the technology with the blockchain as your database to help the users to lower the operational fee, to actually have your own, quote, bank accounts. And through the TradFi channels or centralized channels like a P2P offline channels to get the users' assets on chain with full transparency that people can choose. And next year, we're going to build out a way for them to be able to spend it. Of course, that's going to connect it with the traditional fiat rail that's going to be compliant with each of the regions. But that can actually give the traditional TradFi services that cannot serve the users tremendously for the, I don't like the word global south, but that's what we are here, that we feel the social impact that technology can enable. So it's more than just DeFi being chasing after the yield. It can be for daily utility and the usage and fundamental financial securities that lots of the world's population cannot have access to.
No, thank you so much for all these insightful answers. So one final question, and once again, back to my one-word answer. What is one word you would use to describe the future of DeFi? So I'll let you guys think about it, but the idea is you guys don't need to explain. But for those in the audience, we have lunch right after this. So if you want to know why they said the word, why they chose the word, you want to continue the conversation, that's platform for you to engage with these speakers. And I'll go first, vibrant. Any of you can go in no particular order. Just one word, you don't need to explain. We'll leave it at that.
Maturing.
Empowerment.
Say real yield.
Inclusion.
Revolutionary.
All right, with that, we wrap up today's panel. Ladies and gentlemen, please give a warm round of applause to our panelists.
And the next up, please the moderator and also the speakers to come to the center of the stage. And we're gonna have a photo station first. 3, 2, 1. Okay, once again. 3, 2, 1. All right, great. So thank you very much for moderator and also for the speakers.